The new Cold War has begun and the battlegrounds have been drawn. In Europe, the Russian-Ukrainian war trudges on 500 days after the initial Russian invasion force entered the country, with over 17 million people displaced and approximately $411 billion worth of property damage being caused. An end seems no closer in sight. From the onset of the war, markets have been shook with volatility as prices of commodities like coal, wheat, gasoline, oil and corn have grown exponentially, resulting in a rise in the cost of living across the world and a decrease in already stretched savings following the COVID-19 pandemic. And unfortunately, things only appear to be getting worse, as over in the Pacific, relations between the US and China are eerily cold as we stumble into a second Cold War, with the CCP taking reign of the East and America remaining hegemon of the West. Now, relations between the US and China have been rocky for some time, with all cooperation seemingly looking to collapse in the near future. China, alongside the BRICS, that is Brazil, Russia, India, China and South Africa, are even looking to move away from the dollar by creating their own shared, uncontrolled currency, which has its value derived from the vast quantities of commodities in which the BRICS control, which just so happens to be around 1/3 of everything on Earth. Tensions surrounding the self-ruled island in China have been at an all-time high following Pelosi's visit to show the world the success of the people of Taiwan, the courage to change their own country to become more democratic, and to exchange views on deepening Taiwan-US relations. Predictably, this drew fury from China, with government officials like Wang Yi, the foreign minister, stating that US politicians were playing with fire and that the visit is very dangerous and stupid. These views were supported by state media outlets who churned out calls to shoot down any and all US military aircraft flying into Taiwan, essentially calling for World War III. And this all comes down to China's 2049 plans of national rejuvenation, a narrative vision used to refer to the revival of China's prosperity, national power and international standing, with the date of 2049 marking the 100th anniversary of the People's Republic of China. Xi Jinping, the Premier of China himself, even stated in 2022 that resolving the Taiwan question and realizing China's complete unification is for the party a historic mission and an unshakable commitment. It is also a shared aspiration of all the sons and daughters of the Chinese nation and a national requirement for realizing the rejuvenation of the Chinese nation. He's been invoking patriotic language regarding Taiwan for years now, and it's clearly in an attempt to justify any future conflict to his people. And while Xi Jinping claims this is all benevolent and for the good of the world, the truth speaks differently, especially since China's momentum to surpass the US as the world's biggest economy has been thwarted by sluggish consumer spending, a crisis-ridden property market, weakening export demand, record youth unemployment of 21% and towering local government debt. All the while, Taiwan has distinguished itself as the center of the semiconductor manufacturing industry, dominating international markets and accounting for 60% of the global semiconductor industry, which is projected to become worth $1 trillion by 2030. This key infrastructure which Taiwan holds is essential in countless electronic products that are used daily in our lives and in the development of future innovations like AI, where 93% of advanced semiconductors used are provided from Taiwanese microchip factories. There is no doubt that the real reason why China is so insistent in obtaining control over Taiwan, as the power that the island holds over the global economy would be significant enough to tip the balance of power and allow China to achieve its vision of national rejuvenation and probably even global control. In this day and age, AI seems to dominate almost every conversation, and for good reason. It presents the opportunity for exponential advances, and this could throw the investment world on its head. Those who refuse to recognize this risk being left behind as Taiwan grows into the most important tech hub in the world. Now, in the 1850s, California experienced a wave of national and foreign migration when gold was found at Sutter's Mill. This discovery of this gold brought approximately 300,000 people to the area, all of whom were eager to begin searching for their own private fortunes by digging for gold. And while some did find their riches digging for gold, and the vast majority of those who actually got rich didn't dig for gold at all. No, the biggest winners were those who sold the prospectors all their toolkits worth of equipment. From shovels, pickaxes, tin cans and wheelbarrows, these few entrepreneurial prospectors had recognized there was a consistent demand for tools and equipment required for mining. This opportunity presented far greater returns than the mining itself, which suffered from intense competition with low chances of finding substantial amounts of gold. In essence, what we can learn from this story is that sometimes it's more profitable to sell components for someone else to enter a prosperous field than it is to enter that market yourself. Sometimes we shouldn't dig for gold, we should sell shovels instead, and this applies to so many investment opportunities more today than ever before. The crypto and Web3 space is a prime example. Some crypto investors have gotten rich, but most actually lose money, and they lose big time. But guess who doesn't lose? The people who sold the shovels to the people digging for gold, and in this case, the reliable and legitimate exchanges. Big crypto exchanges like Binance, Kraken, Coinbase won massively from selling shovels. According to former Binance executives, the privately listed company Binance is worth $300 billion today. Kraken, one of the earliest crypto exchanges, has a current estimated valuation of around $10 billion, and Coinbase, now a publicly listed company after an IPO in 2021, is currently worth $16.7 billion. Now, if you go and check any list of the richest crypto billionaires, we can see that all the richest within the space have either owned or currently own or are working as the CEO of a major crypto exchange rather than actually investing in the assets themselves. But as of currently, crypto is on the sideline. The attention has shifted to a new form of gold, and this new gold is AI, and the prospectors are big tech. Generative AI systems like ChatGPT has launched a wave of interest into the sector, with the system's creator, OpenAI, discussing offering an IPO which would value the company at $29 billion. Think this is overtly aspirational? Well, think again, because venture capital firms, the Founders Fund and Thrive Capital have been in talks with OpenAI to buy at least $300 million in shares, more than double the 2021 offer received by the company, which placed a valuation of $14 billion on the company. But if AI is the gold and all these tech companies are working to make money with AI, what should we do? Well, we should make money from these companies and others using AI exactly like how Nvidia has done. Nvidia, the tech company which designs and creates a multitude of different computer chips, has been doing incredibly well by selling shovels to those who want to use AI. Well, not literal shovels, but computer chips. It turns out being a chip manufacturer in 2023 is an incredible venture, with Nvidia profiting greatly from its role as one of the largest and most dominant suppliers of AI hardware and software, just like the mining equipment salesman during the gold rush. 6 months to date, and Nvidia's stock has risen roughly 184% to approximately $415 a share from $146 a share, with its market cap reaching more than $1 trillion. This came following weeks of rapid growth and a jump in price of 24% or $240 billion in only 1 day's trading on the 24th of May. All of this is because they're selling more chips than ever, and that's because of the new AI boom.
So the demand for chips worldwide is blowing up right now, and it's making some companies very, very rich, and suddenly everyone is trying to work out how they can get in on this too. There is so much evidence that AI is going to change the world, and every company in the world is rushing to implement it at the same time, and they all need chips to do that. And that leads me onto Generative AI Solutions, this video's sponsor, whose ticker symbol is AICOF, who are seeking to be one of those companies that profits from this gold rush in AI and chips. And we all know that the best way to make money isn't to dig for gold, but to sell the shovels instead, and that's exactly what Generative AI are doing. This company makes the computing power that AI can then be built on top of. So instead of trying to make the AI themselves, they're simply selling to businesses so that they can make the AI. They help ensure the businesses using AI don't need to worry about getting all the computing power necessary. They can instead just focus on the AI. Generative AI have built a proprietary cloud system for AI called MAI Cloud, which is almost like Amazon Web Services or Apple iCloud for the AI world. It's a culmination of advanced computing capabilities integrated seamlessly into a cloud-based solution, and it allows companies to not have to worry about building their own giant server farms to run their own AI systems, which is an insanely time-intensive, difficult, and expensive thing to do. These AI companies can use MAI Cloud instead of building their own in-house systems, just like how cloud-based solutions have been working with businesses and making billions over the last decade. And of course, we can go back to Nvidia to look at the potential here, as we mentioned earlier. Shares of Nvidia exploded this year, and not because more people are playing video games and need their chips for that, not because more people are mining Bitcoin. No, it's because of AI. It's because companies all over the world are rushing to implement AI for their systems and processes to make more money and make themselves more efficient, and they need computing power to do that, and generative AI solutions are providing that computing power. They're even using state-of-the-art NVIDIA H100 graphic processing chips in their cloud services, which means other companies don't have to go out and buy NVIDIA chips at insane rates. AI is doing doing ridiculously well. We've all seen how incredibly effective it can be, and the efficiencies when talking about running businesses are almost unfathomable, and every business wants those efficiencies. I'm guilty of this as well. I'm using loads of AI tools behind the scenes to try and improve my processes, but the chip supply is simply not high enough. So generative AI have a great opportunity to provide that service to these businesses instead. Now, generative AI has even been acquiring other AI companies, incorporating them into their businesses, which means when you invest into generative AI, it's almost like buying shares of an AI fund or ETF, because you're getting exposure to a bunch of different AI companies all at once, which is great if you want exposure to this exploding sector. My personal favorite acquisition they've run is Remit, which is a leading provider of automated revenue recovery services for medical billing, and they use AI to run their processes better than ever before. The AI boom is well and truly here. If you don't believe me, just go and look at what has happened to Nvidia over 2023 so far. AI is growing exponentially, and many investors are looking for ways to invest into AI to share in the wealth it creates, and generative AI is my choice for my portfolio. The ticker is AICOF. You can get it on something like E-Trade or TD Ameritrade. Do some research, do your own due diligence, look at their acquisitions, and look at how crazy this AI market is looking right now, how much it's growing, and you'll see how much potential generative AI has. There'll be a link to their website down below in the description and the pinned comment to have a look at, as well as their ticker symbol too, so you can look at their stock. Or if you just want to watch another of my videos, then click this button right here.